Hello, and welcome back to Explain the Charts. Today, April 18th, 2025, we're analyzing the SPY, the S&P 500 ETF. We'll go over the recent news and then dive into the charts. Recent headlines indicate the market is still reacting to tariff concerns, with Powell warning of challenging impacts. United Health's earnings miss and Nvidia's plunge have added to market volatility. However, Eli Lilly's positive trial results offered some positive news. Let's start by looking at the one-day chart to get a broad perspective. Looking at the daily chart, we can see a clear trend since December 2023. The market made consistent gains until around April 2025, then dropped significantly due to concerns over tariff policies. We also see an initial rebound in April, a retracement, then another steep drop in early April, followed by a slow gain. We can see that price is mostly sideways this week with small retracements in the last few days. Now, let's zoom in on the last few weeks by looking at the 1-hour chart from March 28, 2025 to April 18, 2025. This will give us a more granular view of the recent price action and potential short-term trading opportunities. On the 1-hour chart, the volatility is much clearer. We see the sharp drop corresponding to the news events and then multiple attempts to recover. It appears the price is in a downward trend, with the price failing to hold above 530. Look for resistance around 530 and support around 525. We need to watch if the next run-up can successfully breach 530 and hold its ground there. Let's examine the last few days even more closely with the 15-minute chart. Looking at the 15-minute chart, we can see the trading since April 14th, with a bounce upward on the 15th, then a long slow slide downward until today. With the latest few candles, we can see it has gone mostly sideways, bouncing a few points back and forth. Looking at the recent price action, it's difficult to predict the SPY's short-term direction with certainty. The market is jittery and it could go either way. However, a break above 531 on the hourly chart, supported by positive news, would suggest a bullish trend. I would guess that's 40% likely. Conversely, a sustained drop below 525 would reinforce bearish sentiment, which I would estimate to be about 60% likely. Keep an eye on these levels and upcoming economic data for clearer signals. To recap, key price levels to watch are resistance at 530 and support at 525. The market is currently choppy due to tariff uncertainties and earnings reports. Watch for decisive breaks above or below these levels to confirm short-term trends. Remember to manage your risk and trade responsibly. Thanks for watching Explain the Charts. See you next time.